Welcome to the June 26, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour, including this week's headlines and strategy guidance you just can't get anywhere else. I am President, McGowan Group Wealth Management, a team of 10, a team that cares. This video is proof that we care about our clients, and this weekly update is designed to help our clients make great decisions. So set your time by going to networthradio.com. Set your time for your own brainstorming session to update your plan. It can be by Zoom or here at the Crescent offices. We are dedicated to serving affluent families right from the Crescent here in Dallas. Let's look at this. This is the Dow Jones Industrial Average year to date. This drama right here, 31,400, was the banking crisis. Turns out it was 4 venture capital focused banks with their primary operations in California. So that was contained in part because the FDIC quickly packaged them up. The big banks who bought them booked an immediate gain, and the issue looks like it was solved, at least for now. Look at this. Dow Jones Industrial Average goes from 31,400 to 34,588. What happened this week? A big part of that was Jerome Powell's testimony at the House of Representatives, where he said he thinks he needs to do 2 more interest rate increases on the short-term overnight bank lending rate, the Fed funds rate. The issue there is that he is going the opposite direction of inflation. And of course, the European Central Bank did something similar, even though Germany appears to be in recession. Wow, what gives with that? Anyway, Dow year-to-date total return, about 3%. This is a surprise. So we've been covering this because we update weekly on the Atlanta Fed. Blue chip consensus was when we started this quarter, all the economists thought we're going to be in a mild recession. They've been predicting that for 4 quarters, and the current update, 1.9%, about 2%, according to the Atlanta Fed for the current quarter. Wow, much different from what was expected, and actually better news. I'm going to show you the impact on companies because you've got something happening on producer price inflation. At the same time, the economy's better than expected. That means companies potentially make more money, and I'll show you that graph at the end. Here we go. This is the huge inflation spike through June of 22. And the annual inflation, that's the 12 months, they add them all up. Total was 9.1% inflation. Everybody's screaming about the price of groceries and eggs. And the month of June, I'm about to show you because it was 1970s style inflation. But what's happened since? Something that's very good for the value of good investment assets, especially those that pay a lot of cash flow. That inflation rate has gone from 9 to 4. Last month it went 4.9 to 4. Well, that's a big drop for a single month. What's going to happen on July 12th? Well, I'm going to give you the math involved in July 12th. First, rents are down for the first time. It's only happened a couple of times since 2008. Year-over-year rent is actually down. You can see the peak, 17.5%. That means $2,000 a month apartment now costs $2,350. Wow, that's not good. And here we're starting to see these things come down to a negative, meaning rents are actually dropping. Lots of multifamily properties came on stream, and it looks like you've got a temporary oversupply, and that is going to filter into what? The inflation numbers, the CPI. There it is. This is month over month. Remember the big June 22? Huge inflation, 1.2%. Put it on a calculator to the 12th power. You get 15% inflation. Wow, that's huge. Okay, so we take that and we say, okay, what's about to happen? Here's what we know. They're going to announce the 12-month inflation rate and the inflation for the month of June, that comes on July 12th after the holiday, right? So here we take only 0.1% in May. Look at what happened in May. We went from 4.9 to 4, trailing 12 months, which is what the Fed looks like. They think they need to be at the 12-month trailing inflation rate. Well, then why would they go up 2 more times? Well, he may have to rethink that position because see what happened in May? Nearly 1% inflation in 22, now 0.1. There's your drop from 4.9 to 4. What happens in June? 1.2% inflation drops off the trailing 12 months. We know that because of the calendar. Doesn't take an analytic geometry expertise to know that. 1.2. Now let's say that inflation in June is bigger than May, maybe 0.2, especially when we look at those rents. Well, okay, if it's 0.2, then it goes down from 4% to 3. What is the 110-year average of inflation? Back to 1913. The conspiracy theorists think that 110 years with the Fed is a big conspiracy. So anyway, when they created the Fed, 110 years, average inflation rate 3.3%. That means prices double every 20 years and the value of your dollar gets chopped in half. So you want to have great assets with real cash flow, which is what we do at McGowan Group Wealth Management. And we've got great opportunities right now, some of them paying 6, 7, 8, 9, and even 10% with assets that do have appreciation potential, as the Federal Reserve acknowledges that big inflation essentially disappeared in July. And the next report is likely to have them reconsidering. And what happens by the Fed's own projections? They bring the Fed funds rate back down. And that competes, because that's like the Vanguard money market at 5. If it goes to 4 or 3, the overnight bank lending rate coming down, then you reflate the value of assets that pay more than the resulting rates on cash. People want to buy stuff that pays more. Well, that could be big news. Dividends. This is why we love dividend companies. Now, we don't love them because this is earnings going down. That's an earnings recession that started in 21. Earnings peaked, $57 per S&P unit per quarter after tax. Whoa, then it goes all the way down to 44. That's not good. That's an earnings recession. And it really culminated in the second half of 22. Well, then they came back up a bit, and what's about to happen to the earnings? Well, the earnings forecast is that we're going to see decent numbers in July corresponding to that 2% real growth, right? You get real growth. Producer price inflation is way down. It is underneath the Fed's 2% on the trailing 12 months. Producer inflation means companies make less money. Producer deflation means companies can make more money. Wow, earnings start to rise. This is the end of 2024, $65 from $50, right? That's a $15 increase. Even if they're half right, that's a double-digit increase in corporate profits here in the United States. And if you're worried about that looming recession, remember, it's been looming for over a year, and yet GDP continues to come in around 2%. Wow, there may be some bargains out there. We look forward to updating your plan. Go to networthradio.com, contact us there, and we'll set your time for your Zoom call or the in-office tour. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.